Just give me one moment here. All right, we're live. Good morning, trade pros. Welcome to the morning market update for Thursday, September the 19th of 2019. This is George Papasov, Trade Pro Academy, joined by the beautiful team here to the right and left of myself. We got company coming in the office today. And just a quick reminder, tomorrow morning, our good friend and former floor trader Anthony Drager joins us in the office. He'll do the YouTube update with me, so it'll be a great opportunity to get a perspective from two traders. And then tomorrow at 2 p.m. Eastern time, the link is in the description below. Check it out. We're going to do a live Q&A. This is your chance to ask us anything. We both don't care about questions. We're not sensitive, and we love to give value and information. So we're going to be sitting here answering your questions. So be there. It's at 2 p.m. The link is in the description. Be sure to join us on time. We'll get started promptly and answer all of your questions. It could go 10 minutes. It could go an hour. The question is, how many questions do you have? So give it some thought, and I'll see you there. I'm super excited for tomorrow. I love to do these Q&A sessions because I get a chance to interact with you. All right, let's talk about the big news over the last 24 hours. It was the Federal Reserve cutting interest rates by 25 basis points. It caused a lot of market volatility at 2 p.m. on the cut, and then markets sold off and then rebounded, and now we're back to pretty much flat. I have a feeling that we're going to probably push the all-time highs today. We've tried the downside a lot of times and it's failed. I think today we're going to move to the upside. A little bit of a sell-off early morning, and then we're going to reverse and move sharply higher. So I'm anticipating a push to the upside. Here's what happened yesterday. Let me give you the key updates of the Federal Reserve meeting minutes and the press conference. The Fed cut the federal funds rate by 25 basis points to the new band of 1.75 to 2%. That's down from 2 to 2.25. So they have reduced interest rates. They've also cut the IOER by 30 basis points to 1.8. That was all expected. But the part that wasn't really certain is this. They don't expect any more cuts in 2019. If you look back about 6 to 8 weeks ago, we're expecting 3 more rate cuts, plus this one that happened yesterday. So 2 additional as of now. And now we're expecting 0 for the rest of the year. And the probability of them not dropping the rate yesterday was actually higher throughout the week leading into it. So all this tells you is there's more of a hawkish tone. A hawkish tone means tighter policy, higher interest rates. By not cutting more or acknowledging they're not going to cut more for 2019, even though we had a dovish announcement of a rate cut, the future is what the market cares about. All right, this rate cut was all but priced in. The future is that there aren't going to be any more rate cuts. So this is a hawkish actual FOMC meeting. Here's the fun part. The Fed's never been more divided before. 7-3 vote to cut. All right, so we had 3 dissenters, 3 people who said they shouldn't cut. Esther George and Rosengren voted to keep the rates unchanged. Fed's Bullard voted for a 50 basis point rate cut. He wanted to cut twice. It's not a surprise. He's the dove. He wants lower rates, all right, higher liquidity, and he voted to cut 50 basis points. Here's a question I asked myself when I read those meeting minutes. Is he looking to please Donald Trump in the case that Jerome Powell resigns under pressure or is forced to resign, voluntold, leaves the Fed? Is he looking to take the head role? It's an interesting question I asked myself, and I was wondering. All right, so 7 FOMC voting members of 12 predicted another cut this year, while 10 said they're going to hold or even raise rates. So there are now more Fed voters looking for a hold or even a rate increase. So what this tells us is that this is a mid-cycle adjustment. The Federal Reserve used those words. They said we've been in a rate hike scenario. We overdid it a little bit. The economy's gotten a little weaker. All right, markets have stalled out. Let's do 2 cuts to bring it back in line, but it's a mid-cycle adjustment with expectation of future cuts or future hikes rather. They're just, if you think about it, it's a dip. It goes up, drops by 2 basis points or 50 basis points, 2 cuts, and the expectations for at least a hold or continuation to the upside now at this point. Obviously, as new information comes in, those odds will change, but that's what you need to know about the Fed. They cut, but they're not expecting any more cuts, and they're going to be data dependent. All right. The bigger event, though, that's overshadowed by the Fed that no one's talking about are these repos. All right. Drager's boarding. He just texted me. Great. Thanks, Drager. Let's talk about the repo that happened. This morning, the New York Fed's offering an overnight repurchase agreement. If you don't know what a repo is, I won't go in detail here. watch the video of yesterday, because yesterday's video explained it in full what a repurchase agreement means and how a repo works. The short end of it is that this is the Federal Reserve providing liquidity to the banking system because there's a shortage of US dollars. There's a shortage of capital to go around. So they injected another $75 billion into the banking system. All right. And that's the third day in a row. The first day they did 50, the second day, I don't quite know because I didn't check the stat. But the third day, which is today, $75 billion are going to be injected further into the banking system. Now, if you ask me, that sounds supportive. That sounds accommodating. That sounds dovish. So what they're saying in the Fed meeting minutes and their Federal Reserve meetings isn't really aligning with what they're doing. But the problem is this. The Federal Reserve controls the federal funds rate, but they don't actually control the interest rate. Banks, consumers, anyone who takes on loans and needs capital is the one who controls the rate. What are they willing to pay for it, right? So the Federal Reserve is losing control of the interest rate mechanism, and that has the market worried. You have to know this, all right? On Tuesday, the repo rate increased to 10%, 4 times the amount of the regular repos, way above the bands of what the Federal Reserve has set. So the Fed's having to add liquidity to the banking system. They're not going to cut more rates in the future, and they're losing control of the interest rate mechanism. This is what you need to know. It's super important. It's got every trader kind of up at night at the moment, trying to assess what the next step is. Let's do a recap of, and I'll keep you posted as developments come out. At the moment, we don't know. How many more repos are they going to need? Is this liquidity going to be enough? Is there a bigger problem of shortage of liquidity in the banks if you've had the repo 3 days in a row? All right, these are questions that are being asked, to which I don't have the answer at this moment. All right, in Asia, Japan's up 0.4%, Hong Kong's down 1.1%, China's up 0.5%, India down 1.3%. In Europe at midday, London's up 0.5%, Paris up 0.5%, Frankfurt up 0.2%, and in the U.S., Dow's down 0.3%, S&P's down the same, Nasdaq's down 0.4%. Crude oil is finding its way higher this morning, opened up at 59.02, up about 1.7%. Gold prices are down 0.8%, or were, to 1504.40. Now they've rallied, opened up at 1511.20, seeing a little bit of double top action right at the overnight high. Bitcoin's down 3%, back below 10,000. And this morning we had initial jobless claims come out, better than expected. 208,000 people filed for unemployment versus 213 expected. All right, and the prior was revised higher by 2,000 jobs. So all in all, it's a bullish number, but a very, very mild bull. All right, out of the Philly Fed business outlook, we got 12.0 versus 10.5. Prices paid went up, huge, big time, which is good. It's supportive of business activity. And at 8:30, we also got the current account for the second quarter in the United States. The current account is basically the measure of trade. The United States is minus 128.2 billion versus minus 127.4, and the prior deficit was revised worse by 6 billion. And so if you think about this, it's just telling you that the trade disadvantage isn't disappearing for the US with China. All right, despite the tariffs, despite the negotiation talks, which, by the way, there's some news of a potential meeting in sight in the month of October between China and the US. I think when that meeting gets announced, we probe to new all-time highs and we continue higher. It's going to be bullish sentiment. For the rest of the day, 10 a.m., we have some big announcements. Existing home sales top of the hour, leading indicators. 10:30 got natural gas inventory, and 4:30 money supply in the Fed balance sheet. All right, so we got for you guys, it's a post-Fed day. This morning we have the Bank of England as well out of the UK. That's going to cause some volatility in the pound. And volatility is picking up. So I expect to see a move today. Last couple of days we've consolidated for the Fed. The Fed announcements happened. Now I think we make the move. So I'm looking for early morning weakness with a reversal for more upside to the late morning and early afternoon. All right, that's all I got for you guys. Send you love, joy, and happiness. Manage your risk. Trade like a trade pro. We'll see you tomorrow here with our good friend. And remember, tomorrow at 2 p.m., we're doing a live Q&A. You could ask us anything, and it'll be really fun. I'll see you there. Love you guys. Have a great day. Trade well. See you tomorrow. Bye. All right, Boxman, since oil is open and ready to rock, over to you, sir. I'm going to throw you on panelist mode, and we'd love to hear about the oil markets with you and what we're going to get out of here. I think we get a lot of volatility out today and the S&P, so we're going to have a ton of opportunity in the room. We had great results yesterday. Let's keep it going. Morning, brother. How you doing? YouTube, take care.